Anybody? Thank you, Robert. All right. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades made by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. I bought rig today. Kept that as a swing despite the fact that it looks like a failed breakout on the daily. My plan is to give it some space. It was never meant to be a day trade. So we'll see how that one plays out. And it was a Fed day today, Fed minutes today, helping give the market a little bit of a boost. Nothing too spectacular. We're waiting on NVIDIA to come out. That could be market moving as well. SPYs as of right now, down a little bit from where we closed, but flat basically. Qs down very small, relatively weak all day. And the IWM basically also flat. So we're down a little bit from where we closed here across the board, even though it's only been 10 minutes. We're waiting on the NVIDIA numbers to come out. We just saw this Doordash really trading up on its earnings report, but it looks like they missed across the board. Up 12% right now, 11 plus percent here in Doordash on what looks like really garbage numbers, unless I'm missing something. It's actually really interesting, though, if it is bad numbers and the stock is able to be up. It reminds me a little bit, though it's an immediate reaction, of what we saw with Robinhood. When Robinhood came out with garbage numbers and that has marked the low. You know, it's signals like that that may be a signal that we have bottomed out, at least for a short period of time, in the sell-off in growth stocks. Because, you know, when bad news comes out and stocks are able to trade well on it, I've always found that to be a signal of at least a short-term bottom. But again, maybe I'm missing something here on those Doordash numbers. Cisco here, after hours, up 6%. They are announcing a $15 billion buyback. Whoo, boy. Love me a good buyback. Love me a good buyback for a company that makes money. I never really liked Cisco as a trading vehicle. It's kind of a slow mover. But that's a serious buyback. So we'll see how that plays out. Looks like some news just hitting with MTTR right now. More than 500,000 subscribers. This MTTR has not been able to get out of its own way. Down 12%. We saw Roblox get smashed today. Roblox down 26% on that earnings report. We saw that kind of come out last night. Justin letting us know that the market cap for Cisco is $230 billion, to give some reference on it. Some crazy numbers there. Definitely some big numbers. Fastly's out. Fastly trading down on its report. I was looking at this $30 resistance level in Fastly for today, but given the fact that it was going to be having earnings, not the move to get into that. It never really triggered through that 30 anyway. It kind of closed near it, but now Fastly's trading off on its report. Anyway, let's kind of go to our usual stuff here while we wait for NVIDIA to come out. So for the third day in a row, it's Wednesday, right? Every day so far this week has been kind of a tricky trading session because we have been in this headline-driven market, and that was no exception today. And technically, we're in a really tricky spot. So pre-market this morning, first we saw a really good retail number come out. How's today, right? It almost feels like a year ago. First we saw at 8:30 a really good retail number come out. Retail sales were a big beat. And I think that those types of numbers are going to become increasingly important as we look to see what growth looks like in this economy as we're coming into increasing interest rates. So good retail sales number, market rips higher. About 10 minutes later after that retail sales number, reports start coming out about Russia troop mobilization on the Ukraine border again, which then gave us some decent market weakness all the way until when we actually opened. And when we first opened, we sold off hard, especially the NASDAQ. The NASDAQ sell-off in the beginning of the day here was pretty ruthless for the first, like, 25 minutes or so, more or less straight down. And I think I commented somewhere around this area, somewhere near the lows, that we should at least see some sort of snapback. And we did. We got a little bit of a snapback, got some stabilization. But then, of course, it was a Fed day today. Not an actual Fed day, just, Fed minutes getting released from the last real Fed day. And usually on these types of days, the market gets slow, choppy, and that's exactly what happened. We kind of just went sideways here for all afternoon. 2 o'clock comes out, and the information on the Fed minutes was interesting. It was a little bit of a dovish kind of take with some of the language there. Reading in between the lines, it looked to me like that was implying that they're not going to be doing that 50 basis point hike that a lot of people have been looking for in March, which I kind of never really thought was going to happen. I know at one point the market was pricing in a pretty high probability of a 50% rate hike in March. I think I saw in excess of 75% probability at one point. And then based on the Fed minute language today, the probability of the 50 basis point hike dropped dramatically. I'm not sure exactly to how much, but it definitely got to below 50%. And the market liked it, right? The market liked to hear a little reassuring dovishness from the Fed, especially after everything they've been getting from Bullard. So the market ripped higher, starting at 2 o'clock. It looks like a really big rip, but volatility has actually died down here a little bit over the course of the last couple of trading sessions, especially compared to the movements that we were having in January. So when you look at the daily chart here, it actually is not a huge candle, despite this move that we had post 2 o'clock here on the Fed minutes. So that really ripped us higher, made for some okay trading into the last 2 hours of the day today, and we closed decently strong. So we'll see how we gap tomorrow. A strong close like this would imply a higher probability of a gap up. And again, if you read Pat's note this morning, the current market mechanics seem like they're better positioned for a move up than a move down, but that can get thrown out the window very easily if a bad headline comes out of Russia or something like that. So we'll see. The big picture technicals here for the market, I still got the Qs up, but I could look at the SPYs as well. The big picture technicals here for the market are still a little bit sloppy. I still think that they are neutral to bearish while we are not negating the negative Maribozu from last Friday, from February 11th. So SPYs getting back above 450 is key. And Q's getting back above, let's call it, let's just call it 360 is what is needed to get this market from what I would call neutral to bearish, to neutral leaning towards bearish to neutral leaning towards bullish, which isn't a dramatic change, but it would still be a win for the bulls if we can recapture Friday's high in the SPYs and the Qs. The IWM continues to be our leader. But again, looking at this type of price action this morning and yesterday morning, and recognizing that we're headline driven right now, and we're at equilibrium after a snapback, but still have that negative Maribozu to contend with, I think it's just very difficult to look at the S&P pre-market this morning and have real confidence in higher or lower today. It almost felt like a coin toss type of situation. Maybe a coin toss type situation with a little bit of a higher probability of the downside, but I think it's difficult right now to feel like you've got a really strong advantage based on the market. So, what do we want to focus on when we have a market that is choppy and not giving direction or not giving us clear signals? We want to try to focus on names that are in play. We want to focus on these companies that are reporting earnings, these companies that have individual news, upgrades, downgrades, or at a minimum, things that are showing relative strength. So there's a bunch of things on the radar today. Kraft Heinz was one of my ideas to go long off 35 this morning off what I thought was a pretty good looking earnings report. And that performed really well, but you had to be super on point right off the open for the execution to be able to get that stock. You had to be there really early right away to be able to get stock. If you waited even like 2-3 minutes after the market opened, you just totally missed the move. So that Kraft Heinz turned out to be a pretty decent one. I was looking at this Upstart, never really got the chance to get into it. It acted really well. I probably was being overly patient. I wanted a little bit lower as far as prices go. I would love to be long. That Upstart earnings report was so fantastic yesterday. I'd love to have stock long versus $120, but I'm not paying up to $137 for it. But it's definitely one to keep an eye on. I know a couple guys traded it successfully today. So if you're one of those people, congratulations. We're looking at these gold miners today for upside continuation. That's still the Upstart chart. We're looking at gold miners today for upside continuation. I think that these gold miners, I mentioned in the morning meeting, it's the best that they've looked in quite some time. I liked the idea of being long GDX, ideally versus yesterday's low. And then you had this GOLD come out with a fantastic looking earnings report, increasing their dividend, announcing $1 billion buyback. And NVIDIA's out. NVIDIA trading down here initially. NVIDIA revenue looks like a beat, a small beat, about like 0.2 billion. Stock is trading off 3%. Not a major movement. EPS beats by 10 cents. We need guidance. Stock's trading back to flat. Yeah, revenue and EPS looking solid. Here we go. Yeah, guidance is solid. Solid. Yeah, there we go. That's the number the market was looking for. There's your uptick. Nice, Josh. Good job, man. NVIDIA sees 8.1 billion plus or minus 2%. That's weird for them to say that. Versus an estimate of 7.22 billion. So even your plus minus 2%, that's a solid beat. Good stuff on that NVIDIA for the moment. Still not a huge reaction, up 1% right now after hours. AMD not really doing too much as a secondary play there. We'll continue to monitor that. I'm actually surprised that this thing's not trading better off those numbers. Those numbers look pretty solid. Back to flat right now on that NVIDIA. Okay, anyway, we'll pay attention to that tomorrow morning. What was I talking about? Gold miners, right? GOLD was one we spoke about for this morning. This one also just ripped right off the open. Was fantastically strong. You had to be paying attention to this pretty early, I think, to really get involved in it. But this is what we want to focus on, right? We want to focus when the market is just not giving us our setup in the way we want it. These are the types of stocks that we want to focus on. Names that are in play or names that are showing relative strength. I was trying to go after energy a little bit today. They ended up getting weak into the close because this USO really rolled over in the last hour of the day. So I did get involved in RIG today. RIG has a nice breakout here through $3.80. So that's where I was buying it. When the breakout occurred. This is not a day trade though, because it's a $3 stock. I don't think you really trade $3 stocks as day trades. Generally, I don't like trading stocks that are this cheap a price because they just don't move well enough for me to be able to kind of get paid with good consistent cash flow. But Stefan likes it, and I got to take that MGI money that he made me and put it somewhere. So I figure I might as well take it and put it into another one of his picks. I'm not as heavy in RIG as I was in MGI, though. I mean, I still have 3/4 of my MGI position for the time being also. But I just don't feel like that I have the same level of risk in MGI anymore from the volatility and how it's getting bought out. Bought a position in this rig today through 380. It just did not close well. I'll probably be giving this some room though. I'll be looking at 340 on the downside as a potential stop loss. Yeah, VAL not giving a great looking candle either. And this VAL looks like it actually tried to break out of a nice little symmetrical wedge. So it's one to continue to pay attention to, but just not a great looking daily candle here for some of these energy stocks. XLE, not a great looking daily candle. So it might be telling us to be a little bit more patient, that these energy stocks might need a little bit more time to cool off, build out a wedge. I still think what I said in the morning meeting applies, which is that all of a sudden the Russian news is causing these energy stocks and oil and natural gas to start moving. But I think that is, how's the expression go? Missing the forest for the trees or something like that. Basically what I mean by that is I really don't think that Russia's the real story here on oil. I think it's really more of a supply and demand situation. I think we saw some comments come out of OPEC this morning that they need to do more drilling. Well, who does the drilling? I think Rig does some drilling, right? So part of the thesis there. So we'll definitely be continuing to pay attention to that as well, even if it did not give good follow through today. But again, this is what I want to be focusing on. When the market itself is giving us chop, we have all these earnings companies that we can focus on because we still are in earnings season. We're not always that fortunate, right? Sometimes the market's in a difficult spot, and we don't have a lot of companies that are in play. And when we don't have a lot of companies that are in play and the market is in a tough spot, then we just don't have too much to do. And luckily, with it still being earnings season, there's kind of a lot going on right now. We can find trades. Corey's saying that AR just announced $1 billion buyback. Interesting. All right, gang. That's really all I have, which isn't too much because market's in a trickier spot. And I'm happy to answer questions now. I do have a 5 p.m. Eastern sharp cutoff today. So if we have questions coming in, I'm going to have to be done by that time. So let me scroll up here in the VTF and see if I missed anything. Is Doordash still up? Where's NVIDIA? Yeah, Doordash is still up. NVIDIA is still trading very sloppy. Looks like that MTTR really missed on their report, huh? Yeah, gross. Not so good. All right, scrolling through the chat here, not really seeing any questions. Awesome, Mike. Keep at it. Glad to hear it. Dollar here, what rules you use to go from pre-market to the opening? It's kind of a broad question. So again, the question is, what rules do I use going from pre-market to the open? So I'm doing most of my trading after the market opens. We have access here on our professional trading accounts from 4 a.m. Eastern to 8 p.m. Eastern. But most of what I'm doing, again, is during market hours. I'll sometimes be nibbling on some trades, pre-market, small, or especially if I already have a trade on. If I already have a swing trade on and I have a game plan, and that game plan says that I'm supposed to buy a specific price, and the stock is very liquid, like an Apple as an example, then I'll come in, I'll take my ad back or whatever it is. But for the most part, not doing too much from a trading perspective pre-market. Pre-market's more about research. And the VTF here are the team, Pat in particular, and Josh and Colin help do a fantastic job getting all that news into the VTF pre-market. So, where am I coming up with all these ideas and what we can focus on? Oh, and I totally forgot about that SoFi trade. I didn't go over that. SoFi was actually a big focus of mine today as a secondary to Upstart off the inside day here. But this 1350 is still really big resistance, so we got to pay attention to. And SoFi was actually my best name of the day today, so I don't know how I forgot to go over that one. But where did I come up with the idea to trade SoFi? Where did I come up with the levels to trade SoFi? Where did I come up with, KHC is something to trade today, and the levels in KHC, and the whole list of names that I'm bringing to the team here in the morning meeting? That's what I'm doing before the market's open. I'm figuring out, starting with the big picture game plan. What is the market itself telling me? So I do like a top-down approach. Is the market giving me comforting directional signals? If so, okay, then I know broadly I need to be leaning to the long side, leaning to the short side. This is how we're gapping. Rules and information from the big picture game planning, a lot of that comes from the gap as well. And then I break it down to the individual stocks. On a day like today, when I feel like the market's giving me no advantage, then I want to try to find individual stocks that are in play, that are going to trade with a lesser correlation in the market. That is all done pre-market. I love being outside of the office. I hate going to the office like I was doing all of last summer when I was in New York, because it messes up my research process, right? Instead of commuting to the office, I'm going to need to spend all that extra time researching, which is awesome. So I'm usually starting my process at like 6 a.m. Eastern, if not earlier. Here in Idaho, I've been waking up between 3 and 4 a.m. Local time every day. But I keep myself on Eastern time. I know I've spoken this before, and I know as the group has gotten bigger here, we have a lot of traders in a lot of different locations. It's easy in winter because it's nighttime early. I go to bed. I go to bed at 7:30, 8:30 at the latest p.m. local time, but I'm up between 3 and 4 a.m. usually, getting my day started, getting my research started, figuring out what the game plan is. That's how many hours I put into my process. I believe, and this actually goes back to my fighting career. One of my favorite quotes, and I don't remember the quote exactly, so I'll just tell you the gist of the quote, is from Muhammad Ali in regards to fighting. And the quote is something like, all the work is done before the fight. All the real sweat and blood and tears happens before the fight. It happens in the gym. It happens on the road. It happens in the locker room. It's all the stuff that the audience and the fans don't see when he actually steps in the ring. That's what actually makes and breaks the fight. Trading is the exact same thing. The most amount of work that I'm doing for my trading is happening before the market even opens. And then 9:30, the work is done and it's just about executing, right? I know I want to be long cage C versus 35. I know that I'm looking at GDX long versus 3181. I know I'm looking at gold long versus 2075. I know that if the trade desk breaks through 80.85, I have an interest in buying it. I know my Macy's levels that I want to pay attention to today because it got upgraded. I mean, I'm just reading off my spreadsheet based off my research. There's a bunch of other names on there. I went over them in the meeting. And that analogy, that Muhammad Ali fighting analogy, really applies to trading. And don't get me wrong, execution is a big part of it. In both fighting, in the boxing ring, right? You did all that work. I mean, as most of you guys know, I used to be a professional fighter. I definitely had, situations where I had a great training camp, and then, for whatever reason, you're just a little bit off come fight night. And you got to figure out ways to kind of win ugly anyway, right? And that you still have to execute in game time. And game time for us starts at 9:30 a.m. So I hope that helps with your question there, Dalakir. And I hope I'm pronouncing your name correctly. If I'm not, let me know. Cool. Next here I'm seeing is from Talk Something Goose from YouTube. As always, thanks. I really appreciate you and T3 for this free-for-all for us on YouTube. Okay, cool. Yeah, no problem. And talk to me, Goose. Oh, it's a man. I'm mentally slow this afternoon. That's a Top Gun reference. No, isn't there a Top Gun 2 that's supposed to be coming out? Nothing beats that that volleyball scene, right? I know you guys all love it. I think next question here is from Ricky. Whenever we get a breakout for an inside day over a previous day high, would you consider the current day low as a good stop, whatever that low may be? Or would it be better to keep it tighter to the ignition bar or the last pivot low intraday? I remember you saying that when a stock breaks the intraday low, the probability of it making a new high in the same day was low. So that's why I'm curious. Sure. So first of all, I don't consider the break of an inside day to be a breakout. And if it's not a breakout, then it's not an ignition candle. So I don't want to use like a 5 or 15 minute bar low from when an inside day is breaking as my stop loss, at least not typically. And I will use a 5 or 15 minute low on the candle in which a breakout occurs. We call it an ignition bar on an actual breakout. But I don't consider an inside day break to be a resistance break. There shouldn't necessarily be significantly higher volume that's coming in just because that breaks. So you need a different stop loss than that. One example could be the low of the day, or one example could be the last intraday pivot low that you're looking at, because we understand the importance of pivots in the marketplace, right? The pivot is the spot where buyers took control from sellers or sellers took control from buyers. So it makes it significant from a supply and demand perspective, even if it's on a small time frame, so you can utilize that. The other comment that you're saying in here about like when an intraday low breaks, the probability of a new high on the same day is low, you're missing just a little piece of information with that. It's specifically when there's an opening momentum move. When there's an opening strong momentum move, heavy volume, market's really breaking higher, that low should never break. If that low breaks, all those people who bought in that momentum move are out of the money. And those people are going to be adding excess supply to the stock as they puke out, which can actually create a downtrend and make the stock move the other way. Or even if it doesn't become a downtrend, they're going to be in the way on the stock giving continuation to the upside. So it's just an understanding of supply and demand. So when you have an opening momentum move and the low breaks of that momentum move, the probability of a new high coming in becomes much lower. And it generally will not be a stock or a market that you want to fight and just continue to buy and hope that it makes new highs. Your risk reward there becomes kind of garbage, taking that type of trade. So yeah, good question, Ricky. Next from Robert. What do you think about Space's volume yesterday? Yeah, so I know Space had like a little bit of a breakout and a big move yesterday. I think it cleared, excuse me, I think it cleared like this $9.80 to $10 area, which has been big resistance. And honestly, there's no more real resistance until almost $12 in Space. The news didn't sound to me like it was too significant yesterday. I know it was, I think that they opened up space travel kind of more to the public or something like that. And then it caught a really nice bid. I don't like the company. I actually really dislike the company. But it doesn't, even a company that I dislike, even a company that I think is worthless or worthless, doesn't mean that it can't go higher. Doesn't mean that we can't have good momentum moves, right? Like an AMC as an example. There's long trades sometimes to be had in AMC, even if I think the company is worth $4. So I think that Space is a garbage company, but it gave a great move yesterday on really high volume off of that news. And if you have stock from a good price, today's an inside day. You want to see if that inside day can break to give the next leg of momentum. And I think that your next resistance zone is the space between 12 and 1250. So that's what I'd be looking at as kind of like a next potential target on that. Cool. Diego bringing up Guild as a stock that we can pay attention to. Yeah, good volume in this Guild today. Super accelerated downtrend. Inside day that broke to the upside, which was able to negate this first negative Maribozu. Thus far, it's still an oversold bounce. Hasn't even gotten back to the 80 MA. There is room for the stock to bounce back to 64 on a much deeper bounce and still be bearish. So it's something that's worth keeping an eye on, specifically because the volume was so big. But overall, definitely a bearish trend for this name. From Kabir, how many trades do you make on average? Do you trade patterns, a defined strategy, momentum, or news? All the above. I consider myself to be a really active trader. The volume that I trade definitely has large, variability to it, depending upon the amount of opportunity that there is in the market. On a very low volume type day, I might trade 20,000 shares. On a very high volume type day, I might trade over 100,000 shares. So it definitely depends. And I have a lot of strategies I implement. Many of them are technical. I consider myself to be broadly 85% focused on technicals and 15% focused on fundamentals. I do think that fundamentals matter because they can help you develop a thesis, but it's the technicals that tell you how to execute that thesis. I do a lot of swing trading where I'm actively day trading around my swing trade core position for cash flow. It's one of my favorite things to do. It can enable me, if I do that well, to make money even as stocks go against me sometimes, which is obviously great. But yeah, I trade momentum. I love breakout trades. I trade patterns. It's something we pay attention to. I definitely trade news also. News, though, I wouldn't say I trade news as a trade in and of itself. I will sometimes, and I have a specific strategy for that as well. But more times than not, news is what we consider to be one of our layers of probability. So news is an important layer of probability. I have a whole class on probabilities that I definitely suggest that you pay attention to. And if you really want to know, all the specific ins and outs of how I approach the market, that probability class is just one class of like a 15-class training program that you should work your way through. Next here from Paul. Can you go over a bit of your process and how you build into a position versus a level? And do you take any profits if you don't have the full position you wanted? Sure. A little bit difficult for me to do that broadly because it's very much heavily dependent upon the type of trade that I'm taking and the game plan that I create for myself. So for example, if I'm taking a momentum trade, if I'm taking a breakout, I'm not going to build into that position, usually. That's going to be a trade that I usually will take all my stock all at once because it's a momentum trade. And inherently, if you are building into a momentum trade, you're building into it while it's failing. And you don't want to do that. You want to know, okay, right here's the trigger, I'm involved, let's go for it, let's get paid, I'm heavy right away, and I'm trying to find a tighter stop loss. Other things, I might say, you know what, hey, I want to kind of build into the position a little bit. I'm going to be given a lot of room, and since I'm giving it room, I want to have a game plan in place where I can add to it on the way down as long as it's still above my stop loss. So maybe I'm going to be using multiple entries in that type of situation as I build into something. So that's going to be a little bit of a different type of game plan. It's going to be a little bit more bigger picture. Maybe not necessarily more bigger picture. If it's like a support trade, I think I talked about this in yesterday's afternoon meeting. If I'm going long off support or if I'm going short off resistance, which those are more range-bound market type trades than your momentum trades, which are going to be more directional type trades because your market is showing aspects of momentum or trend. But if I'm taking these more counter trend or range type trades, then there's a higher probability that I build into it. But I still got to have a stop loss, and I still got to manage my risk. And I might be saying to myself, hey, you know what? I'm going to buy some stock here, but I'm going to leave some room for this pattern to build out. I might be a little bit early here. I'm going to leave some room for me to add at lower prices for me to kind of average down my position. Averaging down in the market can be extremely dangerous. If you average down with large amounts of leverage, it's a great way to blow up an account. But there's also ways to average down responsibly. And you can average down responsibly if you know ahead of time, which you always should know, exactly what your stop loss is going to be. And then you can build a game plan into, okay, well, this is X amount of money that I'm willing to risk versus this level. And I'm paying up here initially, so I'm going to take a little bit of stock, but I want to leave room because I think that there can be some volatility to be able to build into this position to be able to get heavier. But I'm still comfortable with the amount that I will lose if I'm wrong. If I get filled in on my 3 ads I'm planning on doing on the way down and I get stopped out, I know exactly how much I'm losing and I'm comfortable with that amount. And if I'm not, then I won't take it. And I think we did a little exercise. I'm not going to do it again today because I've only got 15 minutes and it's a little time consuming. But we did an exercise in a recent afternoon meeting based on someone's question where someone was asking about like add ups, messing up your average down. You basically almost like the accounting of trading. And you got to think about what an average down can do to your price or to let you kind of work your position a little bit to be able to get some kicks in it without having as big of a move as what you might initially need. So you're definitely going to be very trade dependent, but that's kind of as broad of an answer as I think I can give on that. Mike asking if I trade options. Nope, I do not trade options. We do have some people on the team here who trade options. I'm a professional prop trader. I don't think it makes sense to be a directional options trader on the prop side of the business. T3 provides me, so the number one reason to trade options would be in a retail account for the natural leverage that the product can provide to you. On the prop side, I don't need that natural leverage because the company's giving me access to as much money as I could ever utilize. So my thought process has always been, why deal with a less liquid market and why deal with time decay just for capital access when I already have as much capital access as I could ever want? With that said, even though I don't trade options, we got options traders here on the team, but for the most part, they're not really directional options traders. They've got very specific types of strategies that can only be done in the options market, like spread type trades or selling covered calls for cash flow and risk management purposes. Things like that make a lot more sense. The only other time I ever sometimes wish I had options access is honestly for gambling purposes. Exactly what Gabriel just said, actually. Sometimes I just have a hunch, because you never know what a stock is actually going to do in its earnings report, but sometimes I have a hunch that a stock might go this way or that way. And buying equity right before an earnings report is, especially if you're doing it heavy, it is completely irresponsible. It's totally gambling. You might find yourself in a Facebook type situation where the stock just gets absolutely freaking destroyed, or the Roblox situation, stock gaps down 30% against you. But at least if you did it with options, going into it exactly how much you're going to lose. So your risk is kind of premium paid there. So that's like the one time where sometimes I'm like, oh man, I wish I had options access on my T3 account just so I can gamble a little bit. But the truth of the matter is I don't like to gamble. I'm the guy, if we ever go to Vegas or we go to Atlantic City or something like that, I don't sit down at the tables. I don't do it. I don't have an advantage. Why do I want to play a game where I'm going to lose in the long run? I understand that maybe in poker, if you're really good, you can have the probabilities stack in your favor to be able to make money. I don't know the game well enough to be good enough to stack those probability odds in my favor, and I'm not going to spend the time to learn it. So, I'll enjoy drinks with anybody at those casinos, but you're not going to see me really doing any gambling. Josh says you can see me on the dance floor. I am pretty good on the dance floor. That is truth. But I don't think Josh has ever seen me on the dance floor. All right, gang. We can end this afternoon meeting a little early today. It looks like we got through the questions. And like I said, I've got a meeting at 5 o'clock. So happy to call it. There wasn't too much to talk about today. Just because the market's still in a tricky spot. It's a little bit tight. But we did have the Fed. And we did have some good ideas in the morning meeting today that worked out pretty well. So hope everyone is staying profitable or at a minimum, really focused on their risk management and their learning process. I'll see everybody tomorrow morning. Have a great night.